I'm going to copy that and paste it 1, 2, 3 underneath. Then we're going to calculate the average. That some of 80 of them cost $54, 60 of them cost 120 of them cost $60. So now we have to calculate, how much did they cost on average? In order to do that, we're going to take the total units, the total sales price, then the average. So we'll do that by saying equals SUM and sum up the 80 and the 120, enter, and then we'll take the total cost equals SUM of the 4320 and the 72, enter. And then once again, if we had our calculator over here, we just say, well, if the total cost was 11,520 divided by the 200 units, then the average cost is 5760. So if we do that calculation here, then we're going to say it equals the 11,520 divided by the 200, and that will give us the 5760. To prove that calculation, we can do the calculation over here. Say we have 200 units times the 5760 gives us the same 11,520. If we record that, then we're going to record it over here. We made a purchase. How much did we purchase the inventory for? 7,200. Note there's no estimate in this 7,200. That's what we're going to pay for it. And that's going to be, I'm assuming we're going to put it on account. So we're going to credit accounts payable rather than cash. And we're going to go to inventory, double click on it. You go to the end of it, plus, and record this 72 debit, making this go up in the debit direction to the amount we have on our worksheet. Then we're going to record the accounts payable in V64, double click, go to the end of it, plus the 7,200. That's a credit. This is a credit. It's going to put us back in balance and make the accounts payable go up in the credit direction. Let's see what we have next on the next transaction. So I'm going to go down to the next row on row 68, and we'll see what we have next after March 18th. We have March 25th, and we purchased another 200 units at $62. So we're in the purchase column. We purchased another 200 units, tab at $62, tab. I'm going to sum that up, or I'm going to multiply that out by saying equals left to 200 times the 62 and enter. All right. So once again, we'll just recalculate the average now. So we have this 200 units here. I'm going to copy these, right click and copy, and I'm going to paste them into our new row, right click, paste 1, 2, 3, and we bought another 200 units at $62. So I'm going to right click and copy that, put that into our row over here, right click and paste 1, 2, 3. So now as of this date, we have these two amounts. We have the units and the dollar amounts. We need to calculate the average. Some of them cost $57.60 on average, some of them cost $62. Now we'll calculate the new average. So we'll say equals the sum. How many units do we have? 200 plus 200 or 400. How much did they cost in total? Equals sum of the 11,520 plus the 12,4, enter. Now we can calculate the average. So the average, if they cost in total 23,920 divided by the units 400, then they cost about 59.80. So we're going to go into cell L70 equals right once to the 23,920 divided by left once the 400 and enter. That'll give us our number. If we want to prove that, then we can go over here in N70 equals the 400 times the 59.80 and enter. Gives us our same amount here. If we're going to purchase that, we're going to post this, then we can create the journal entry. How much did we buy the inventory for? 12,4. This is not an estimate. That's what we're going to actually pay for it. The estimate takes place in this area here. Then we're going to post that. So I'm going to put my cursor in inventory V63, double click, go to the end of it, plus inventory is going to go up by 12,4 because these are both debits, making it go up because the same thing makes it go up. Then we're going to record the accounts payable, double click, go to the end of it, plus and the 12.4 being the accounts payable, bringing the balance to 53,750. So then we're going to see the last transaction. I believe it's the last transaction. Let's take a look. I'm going to make sure I'm on the next row, row 71. And as of March 29, we have a sale. So we have a sale of 160 units at 95. Remember that 95 is not having anything to do with this worksheet. That's the sales price, not the cost. How much are they going to cost? The $59.80 in this case. So we will be using that 95 when we record the journal entry, not when we record the cost of the goods sold. So we're going to go over here to the cost of goods sold, and we're going to say that we sold 160 units. Tab. How much did they cost? Yeah, about $59.80 on average. And then we're going to say this equals the 160 times the $59.80. And so now we're going to see how many units do we have left. Well, we basically had 400 at about $59.80. And now we sold 160 of them, therefore 400 minus the 160 tab, they cost $59.80 tab, equals the 240 times the $59.80. That's how much we have left. I'm just going to write that same number by saying equals this number in the outer column so that we pull this over here as well. Let's record the transaction. Remember that there's two transactions, one being the sales transaction that we only need these two numbers for, the other being the reduction in inventory and the recording of the expense of cost of goods sold. These happen at the same time. It's easier to see them as two separate journal entries that happen at the same time. So in order to record the first half, all we need are these two numbers. We're just going to say this equals the 160 times the $95 sales price. And that will be a debit to accounts receivable and a credit to the income in this case. So we're going to be over here. I'm going to record this, assuming we sold it on account. Double click, go to the end of the accounts receivable in V62. I'm going to say plus this 15.2, bringing the debit balance up in the debit direction to 95,800. Then we're going to go down here to the the revenue. Double click, go to the end of it, plus this 15.2. This is a credit, that's a credit. It's going to put us back in balance. Going to bring put us back in balance here, bring revenue up, and bring net income up. So then we're going to record the other side of this transaction being the cost of the inventory sold as well as the reduction to the inventory. How much is it reduced by? Well, under the average method, it's 9568 here. That's going to be the debit to cost of goods sold, credit to inventory. Let's record that, see what happens. I'm going to double click on V67, go to the end of it and plus, and post this 9568 debit. That's going to make the debits go up here and bring net income down. Then we're going to go to the inventory. I'm going to double click on it, go to the end of it and plus, and go to these 95 here, the inventory, and enter. Brings inventory down, puts us back in balance, and the inventory now matches our worksheet over here. Note what is the effect on net income from these two transactions. Went up by 15.2, the sales price, times the units, minus down by the expense of the inventory that we sold, called cost of goods sold, for a net effect of 5632.